Hey everyone, we're live. Thank you so much for joining me. Welcome to a brand new live episode of Be the Boss of Your Money. It's called Be the Boss of Your Money because I want you to be the boss of your money and not your money to be the boss of you. This show is about personal finance, investing, business. That's a pretty big umbrella of all of the things that we're going to talk about in this live stream. So I want you to stick around because I've been doing what I do for 30 years, dealing with business owners, regular clients, and everybody in between. So it's something that I know a lot about, and it's something that I can really use this opportunity to share just a lot of perspective. There are a couple of things we're going to talk about. 4 things. The first one, the big one on everybody's mind. Has the stock market recovered too much too soon? Is it time to do a little selling? That's number 1. Number 2, what should you do? What do you need to do? That's number 2. Number 3, okay, the reasons for stocks to go higher and the reasons for stocks to go lower. You need a complete picture. It might not be for right now, but if you can have a picture in your mind of reasons for optimism and reasons for pessimism, it'll help make you better at investment decisions and personal finance. And lastly, we need to reiterate the importance of time horizon and how that's the number 1 determination when it comes to determining your risk tolerance. So we are going to roll the introduction and we're going to fly through this, and I am going to deliver to you a crap ton of value. Is it okay to say that? Okay, here we go. Hello, everyone. Great to see all of you. Thank you so much for joining me in my live stream, Be the Boss of Your Money. If you're new here, I'd like to introduce myself. My name is Mitch Goldberg. I am a financial advisor with the wealth management firm Client First Strategy. It's called Client First because we put our clients first. What I would also want to talk to you about is personal finance, investing, business, all the things that we talk about on this show. If you have any questions, please ask away in the comments. Welcome if you're watching in the live stream, and welcome to you as well if you're watching this in the replay. If you have questions and you're watching this in the replay, go right ahead, hit me up in the comments. I will check for those. Ask questions, ask away as if you were watching it during the live stream. Okay, so the first thing is this. Today, with the Dow being down just under 300 points, major S&P off about a little bit less than 1%. NASDAQ held up pretty good, off fractionally. So the question on everybody's mind is, has the stock market recovered too much too soon? It's an important question because if you take a look at where the major averages are now, the market's really not down that much for the year. And it's down maybe 10% or so on the year, and maybe 12, 13, from all-time highs. That's not a disaster. I mean, that's a run-of-the-mill garden variety correction. Now, that doesn't reveal all of the damage underneath the hood of the market, such as airline stocks, cruise line stocks, that sort of thing. So that's why looking at averages is an average. It doesn't really give you a detail about the internals of the market. But for most of us, we want to know about the overview. So that's what we're going to cover here. Has the stock market gone up too much too quickly? The way I would look at it is this. It's gone up. We had about a 34% drop from peak to trough in the S&P 500, which is an index. You cannot invest directly into an index, but you could invest in a security that tracks or mimics an index. So we have a 34% drop. We've recovered about 60% of that bear market. And it was a plunge. It happened suddenly. You had a lot of days where stocks opened up and limit down. Circuit breakers kicked in a few days. We had a down day of 3,000 points, a down day of 2,000. I mean, 1,000 points swing in the major in the Dow Jones. It's almost like something that we're starting to get used to. Yeah, that's how tough it was. So now that we've recovered a lot, and I was out here on March 16th and 17th saying to you that I have become a buyer. You could run the tape, you could take a look at it. I said you could rebalance. I would, looking to rebalance accounts and buying some individual high quality names, and overall just committing some money to stocks. Things to me had gotten too negative. Well, just about a month and a half later, I'm out here saying, I think things have gotten pretty darn optimistic real fast. And if you watch this show regularly, I've been saying, I'm not saying this for bragging rights. I'm saying this to catch you up to my line of thinking, which I want to be, your line of thinking. Okay. Or at least try it. What I've been saying for the last few weeks is that as more states reopen, and a number of states were planning to reopen, and I talked about Georgia specifically because at the time that was the biggest one. I believe tomorrow Texas reopens. So as more states start to reopen, we're going to have a very good look at the data of what we can learn from these states, rebound in COVID-19 cases, how many businesses can get back to business, how many businesses will never come back. We're just going to have so much data, but it's very bullish, very optimistic for the economy and the stock market. So as I said, as more states come back and we get some results, I said 3 weeks ago, that this week we're going to get results on Remdesivir. That's the Gilead pharmaceutical drug, antiviral drug. And we got results this week. The reason I said we get results is because Gilead said they should have results by the end of April. And, we're in the last day of April as I leave this, as I do this broadcast. So we got pretty good results, and it's the kind of results that gives people hope. Not a vaccine, but at least it puts in people's minds that there is hope that, hey, if I do come down with this disease, there is a drug that could help me that I can take. So these are very bullish. So we had an opening of the states. More states are coming online. Even New York is expected to come back online pretty soon. We got hit pretty hard here. And now we have France and Spain talking about opening up. And, basically the whole world wants to and needs to get back to business. So we've taken the worst case scenario / depression off the table. In spite of the fact that today we got more of about another 3.4 million first-time unemployment claims today. So 30 million jobs. It's staggering to even say this. 30 million jobs have been lost in the last 6 weeks, which is more than all of the jobs created since the last recession 10 years ago, over 10 years ago. So it's hard to be optimistic, but the states opening up again, the market's a forward-looking indicator, so things weren't so bad. But we've gotten to a point now where we could need new things, new data for investors to hang their hat on. What's going to propel the market to another leg higher? Or if we don't get something to propel the market to another leg higher, then the market, I think, goes down. I don't think the stock market stays where it is. I think it's either going to go up or go down. I don't really expect just a boring level to stay here. Momentum is definitely back because even though today was a tough day, we had our best month. April this year is the best single month gain in both the S&P 500 and the Dow Jones Industrial Average industrial since 1987. And it was a really, really good month. Basically what happened in March, we had almost the opposite in April. So now where do we go from here? I can give you the reasons why we keep going higher. Companies like Microsoft, like Alphabet, they're the leaders, the biggest companies in the market, which dominate the market cap of the overall major averages, are doing pretty well. And as long as those stocks continue to do well, they pull the rest of the market higher. The big ones lead, the generals lead. But I feel like, after the day we had some really strong up days. I'm just going to share my screen with you. It wouldn't be a complete show if I couldn't share my screen with you, right? Okay, so let's just take a look here. Share screen. Okay, we're sharing screen. So let's take a look over here. You see this? If you can see this, if you have any thoughts about this, let me know. You have any questions about this? But you can see here for the S&P 500, April of 2020, biggest since a 13% gain in January of 87, and the biggest since also 1974 when the S&P was up 16% in October of 74. So take that, whoever says that October is always a bad month, because it's not true. It's not always a bad month in the market. What else did we have? If you take a look at the major averages, Dow up 288. We talked about that. iPhone's numbers are out. We take a look at who are the leaders today, nothing was up. If you take a look at the 11 major sectors of the market, they were all down today, just some down less than others. But technology was off mildly, healthcare off mildly, discretionary off mildly. No, major disasters. Materials had the toughest day, down 3%, and financials down 2.5%. Not the biggest deal in the world. Amazon, this is going to sting tomorrow. I don't know if you can see that, but Amazon is off about 4.6%, off about $114 a share. I know that sounds like a lot, but Amazon is a $2,000 plus stock. So that'll probably sting a little bit tomorrow. So let's just, we'll get off the share screen now. So here's how we look at it. If you were worried about losing a lot of money when the market tanked earlier this year, and if you thought, you know what, I was way too heavy in individual stocks or just in regular, ETFs, stock mutual funds, you just had too much exposure to risk assets, and you were really nervous about that, what that would mean for your financial future and your retirement. Maybe you were coming up to retirement or you're in retirement and you were starting to lose sleep and you were tempted to sell. What I am telling you is, my feeling is now is the time to take your temperature again and reconfigure your portfolio and decide if you want to be as heavily in stocks as you are. You've gotten your second chance. We have our second chance right now. Major averages are really not down that much. We're back down to where we were a couple of months ago. Not the worst thing in the world. The outlook going out over the next 6 to 12 months has improved greatly from a month ago, but the outlook over the next year is not as good as when we said, what's the outlook on December 31st, 2019. So now is your opportunity to say, am I in this for the long term? Am I taking too much risk? Is it time for me to maybe take a little off the table and rebalance? So now is your opportunity to do that. Don't complain. The reasons the stock market may continue to go higher is the Federal Reserve has said unlimited stimulus, low interest rates until employment goes back to normal employment, whatever that may be. That could take years. More fiscal stimulus. You have the payroll protection program coming. It's already out. There's more money that was just added to it. You have unemployment benefits that are pretty strong. Zero bound interest rates. So there is a reason to be optimistic as far as risk assets, paper assets like stocks go. A lot of cost cutting. That's and earnings just haven't been as. Let's put it this way: the market's not trading on earnings, but the market's trading on outlook, and the outlook has become pretty exciting all of a sudden with the opening of the states and Remdesivir. That's what I've been talking about the last few weeks. But now that we've had those events, is it a, buy in the rumor and sell in the news kind of event? It could be. I don't have a crystal ball, but I do think that if you are over your skis in stocks, let's say you're 70% stocks or 80% stocks, 90% stocks, depending on your time horizon, you might need to scale that back. Maybe you're 70% stocks and you need to be 50% stocks. That's what you need to talk about. If you have any questions about this, you are, certainly welcome to speak to me about this. Okay. me put my ticker in there. So I'm here for you if you want to talk to me about that, or talk to your own financial advisor if you have one, or if you have one you're happy with. So the reasons for the market to go lower. For starters, we've had this tremendous rebound. For seconds, a lot of people who are looking to sell might decide they've had enough. Now it's time to sell. Third, we're coming up to the end of the month. This could be a time where institutional asset managers decide they want to rebalance, and now maybe they have even more money in stocks than they wanted to. They had too little, now they have too much. I'm not saying being, rebalanced constantly all the time. Most people typically rebalance once a year, once or quarterly. That's about it. I've rebalanced mid to around March 18th, 19th, 20th. And I'm rebalancing for a lot of clients, a lot of accounts, again, just because the magnitude of these moves, you don't get these moves in a couple of years, let alone in about 6 weeks. So that's my take on that. But you have to I think making no decision is a decision. If you're sitting in your hands and you're thinking, wow, the market's recovered a lot. I was really worried. Could this go down again? And if it goes down again and stays down and I can't afford that, this is your exit ramp. This is your time to rebalance. This is your time to update your asset allocation to a more conservative or less risky balance. Okay. So the importance of understanding time horizon when it comes to your risk tolerance. The longer you have, the more risk you can take. That I know you know that. The less time you have until you need your money, the less risk you can take. There are a lot more variables to just that, because sometimes you have different accounts, different assets for different goals. But your main determination starts with your time horizon. Then it moves down to your I would say your personality. I would say your attitude toward risk. These are the things that makes personal finance personal. So it's important to assess when your financial obligations are coming up. Some people, if you have a child who's in high school and you haven't taken some measures to reduce the risk in your child's 529 plan, what are you waiting for? I always say that money that's needed in a year or two, I don't think belongs in the stock market. That's different than an emergency fund. That never belongs in the stock market. That's why it's called an emergency fund. If you're close to retirement, you're getting closer, you were even maybe thinking of putting off your retirement because the stock market took such a big hit and you were worried, what are you waiting for? You've got your second chance. Don't get greedy. Don't make this into a third chance. Don't get complacent. If you're complacent, well, doing nothing is also a decision you made. You're making a conscientious decision to do nothing. So I really want you to reevaluate your total financial picture and make sure that your assets, your investments are in alignment. That's all. I know I'm kind of beating the dead horse with a stick here. I have nothing against horses, dead or alive. I'm just saying that, want to make sure you are following some kind of game plan. That's why I have the background behind me, because we're talking about a game plan. All right. So there are a couple of things you could do for investing. I like to speak in terms of portfolio decisions. So if you're going to buy or sell something, make sure that whatever you're doing has the right impact or has the right fit for the rest of your portfolio. If you're increasing your cash position, make sure it has more cash has a proper fit in your overall portfolio. If you decide you want to run out and buy a stock or a particular ETF, make sure it has a good fit with the overall portfolio. I don't want people swinging their money around just because they're trying to jump on some stock that can take a big pop tomorrow or next week on some announcement. I think more often than not, people are wrong about that. They get burned. Then the investment that they purchased continues to go down. And now a quick pop you were looking for becomes a long-term loser. We don't want to be in that position either. So the other thing you could do is rebalance, like we were talking about before. Rebalancing is a really good way for people to buy and sell. It's not a matter of market timing. It's a matter of bringing your assets back to your risk tolerance. There are a number of ways to mathematically calculate your risk tolerance. I use a number of software programs that do this for my clients. Riskalyze is my main one. I know probably a few of you, if you're a financial advisor, you probably use it as well. It's a fantastic program. I was one of the very early users of it, and I continue to be impressed with how much Riskalyze has developed and invested in making their platform even better. And the other thing you could do is maybe use some limit orders. If you were thinking of investing in a particular stock or stock ETF, you could maybe place a limit order 5% below where it is now, or 10% below where it is now, even 20 or 30% below where it is now. It gives you the ability to catch something on the down low, and you almost get into the point where you're rooting for the market to go down. You don't feel as bad because you're actually participating in a solid, logical way. But I will tell you this: if you don't make the proper portfolio construction moves in terms of your assets, your risk tolerance, your time horizon, if you don't do this before a dramatic drop, it's always too late after the fact. So I want you to take advantage of the second chance we're having, this big rally. Maybe the market goes higher. I have reasons to believe the market could go higher. I also have reasons to believe the market could go lower. I think right now they're pretty well balanced. We've gotten a lot of the good news that we were hoping for, and now we've got to see what comes next. That's what I'm talking about. I'd like to thank you for watching this live stream. I hope this is helpful to you. You are certainly welcome to reach out to me. I would love to hear your questions. Let's see if anybody's out there. Hey, Matt, let's talk nugs. Okay, Matt, next time we talk about a new area of the market, like the Beyond Meats of the world or alternative foods, that sort of thing, we should definitely have you on, and we'll talk nugs. I would love to do that, and I think it's a great idea. Okay, anyone out there in Facebook land, LinkedIn land rather? We've got a couple of people. Hey, Elaine, how are you? Elaine, your interview with JJ with John Green yesterday was fantastic. We need to catch up. Let me know your availability. You got it, Elaine. I'd love to catch up. We've got a couple of people out there watching. So that's it. I'm going to end this broadcast now, make it a little bit shorter than usual, and I'll be back tomorrow. Thank you very much.